Hello everyone, this is Tsai from Rennie and Associates Realty, and today we have a special guest, Sherlock Yam from the Win Louis Group. We're going to talk about mortgages.
That's right. So John, tomorrow there's going to be an interest rate announcement by the Bank of Canada. Most likely the rates will go up by 0.25%. And it does affect our buyers, right?
Okay, yeah, so 0.25, really, what does that mean for the buyer? Let's say if they were to purchase a home, let's say 500,000 versus maybe another price bracket, a million, from the prime of 3.7, which is what it is right now, to 3.95. How does that make a difference in terms of payments?
Yeah, the monthly payments change about $15 per $100,000 that you're borrowing. So let's just say instead of a $500,000 purchase price, you're borrowing $500,000, and basically 15 times 5, so $75 per month is the change with a $500,000 mortgage. With $1 million, you're looking at a bit more, obviously, so $150 per month.
$150.
Yeah.
Okay.
It does affect the borrower's ability to get money as well. With every change of 1%. On average, it's about a decrease of 10% maximum purchase price. So yeah, it definitely makes a big difference. I mean, on a 0.25% basis is not as significant, but compared to last year, interest rates have gone up by over 1%, and a lot of our buyers have been feeling that. Not only that, the stress test that was introduced in January made a huge difference to some of the borrowers as well. So add that to the interest rate increases, made a huge difference in the last year.
Okay, so with regards to buyers going forward then, how it usually works, to my understanding, is that if you want to get into the market at the original rate, you can hold the rate and get a pre-approval.
That's correct, John. Yeah, so with the rate announcement that will happen tomorrow, that directly affects the prime rates. With the pre-approval, typically you're allowed to have rates held. Most banks allow 90 to 120 days. But that only applies to fixed rates, because variable rates, prime changes.
Right.
So really you're not holding the prime rate, you're holding the discretion off of the prime rate.
Right.
Nonetheless, I definitely recommend getting a pre-approval and locking in the current fixed rates, because when variable rates change, fixed rates will change as well. So it's not a bad idea to talk to someone like myself, a mortgage broker, or your bank representative.
Right. Great. So there you have it. So buyers should definitely lock in their rate, whether or not they're using the variable close or open or the fixed rates. It's definitely a good idea to hold it for the next little while before the rates go up. So what does that mean now, Sherlock, going forward in terms of the seller's end? What do you think they should be looking out for?
With a change of 0.25%, I don't think it'll make that much of a difference to your sellers. But if they're holding out for a higher price, as we talked about earlier, if the buyer's affordability decreases by 10%, then that may affect your sellers.
So what you're saying is that if they were to purchase something that's $1 million, after the rates increase, you're saying 10%.
Yeah.
10% meaning they can only now afford 900,000 from $1 million.
Yeah, it depends. I mean, it is a 1% increase in rate, though. So that may happen over the course of a year,
Right.
year and a half.
Okay.
Yeah.
So with that being said, 1 year later, if the rates were to go up 1%, that means if you can purchase $1 million right now in terms of a purchase price,
It'll be 900,000.
It would be 900,000. So that's something to watch out for in terms of the seller in this market condition. Well, I want to thank you again, Sherlock, for joining us and educating us about mortgages going forward. If you have any questions with regards to mortgages or need a pre-approval, please reach out to Sherlock anytime. Thank you, Sherlock.
Thank you, John.
Again, this is Tsai from Rennie and Associates Realty. Make it a great day.